Trading, what a game. I'm going to show you a system that I've used for 30 years that'll make you profitable in the stock market. A strategy that actually will help you and will work. Hey, it's Coffee with Rob. So, let's have some coffee. For those of you who don't know me, I'm Rob, and for those of you who do, welcome back. Come into the office with me today, and let's go and discuss a strategy that's going to help you in the market. I'm going to show you a system, a price action system on the charts that you can use that'll help you or give you that high probability possibility of a good trade before we get to the strategy. The charts are only the squiggly lines. They're only the system that's going to show you how to trade. That's going to show you how to get in and out of trades. But the strategy to actually win in the markets is a completely different ballgame. Because what you have to understand is you don't make the money from the system or the squiggly lines. You make money from the strategy. And that's what nobody tells you. That's what nobody teaches you. Everyone teaches you that you're going to make money off the squiggly lines or the candles or whatever the case or the system. But in fact, no two traders trading the same system will have the same result. And why do you think that is? There's only one reason or one possible reason that could be. And that's because winning in the market or losing in the market is all about how you approach your trading, how you approach the management of your trade. That's what I'm going to show you today after we've been to the charts and after I've showed you the charting system. Thing is, guys, trading is a 50-50 game. And the reason it's a 50-50 game is because the market is made up of buyers and it's made up of sellers. Everybody's got a system. Everybody wants to win because that's trading. So for you to think that somehow or another your system is going to be better than that guy's system every single time, you're deluded. It's 50-50. Every time you take a trade, you got a 50% chance of winning. But you're going to look at me and say, but how am I going to win if I can only win half the trades? Well, that's what the strategy is all about. And it's quite simple, really. And we're going to go into it in depth. But the strategy is, at the end of the day, to lose less on your losses and make more on your wins. And we're going to go into it in deep detail so that you can understand it. But the other thing you have to understand is that trading is immensely risky. Trading's a risky game. 60 to 80% of people who trade, get into trading, will do trading, and even pro traders lose money. You're going to say, I don't believe you. Well, day traders, guys who trade 5-minute charts, 99% of traders lose money. Whether you believe me or not, I don't really care. I'm just giving you the facts and I'm just telling you what it's all about. It's the same as with the systems. As far as I'm concerned, if you're not interested in what I'm telling you and you don't believe what I'm telling you, then simply go and follow one of those guys who shows you a little cell phone with all these trades on it and, promises you a Lamborghini next week. Perhaps you'll do better there, but probably not. Because what I'm telling you is factual. This is the reality, guys. Trading's not a game. It's not gambling either. This is a career. If you went to become a doctor, you wouldn't expect to become a doctor in a week. But if you want to become a trader, you're expecting to become a trader in a matter of a 1-day course or a 2-day course. I don't know how long was your course and how many dollars you paid for it. And you're going to be a trader in a week. Suddenly you're going to be putting money in the market and making a profit. It sounds easy, but believe me, with 60 to 80% of traders losing money, perhaps it ain't so easy. Perhaps it's a little bit more difficult than you thought it might be. That's why I'm here to give you a strategy that'll make you a winning trader and a profitable trader. So guys, let's go and have a look at the charts and let's go and see on the charts what the price action system is that will work for you. So those guys that have watched my videos before, it's probably a little bit repetitive, but it's good for you because there's always something you can pick out. And there's always something that will, help you along at the end of the day. But then after we've been through the charts, stick around because I'm going to show you the strategy and then you can decide if that's the way you want to trade and if that's how you might make some money at the end of the day. Let's go and check it out, guys. Here's the charts. Here's your simple system that will help you with your strategy when it comes to trading to be a profitable trader. This is the US 500 as it finished last week, and obviously this is not live. I'm making this video for you so that you can understand how to trade. The live show will be tomorrow, as we always do. So what I'm looking at here is here's the US 500, and if you take a chart and you just look at it like this, you would be like, so which way do I trade this? How do I trade this? Do I go up? Do I go down? What should I do next? Now, what we do is we create a high probability trading system that shows us what to do. So here's all the different products you might want to trade. So today we look at the US 500 just out of interest because it is interesting. Now what I do is I say, okay, I need to know I'm going to trade on the 4-hour chart. And I trade on the 4-hour chart so that I can relax. I can put my trade in place that I've worked out where it's going to be, and I can go away and come back later and see what it's doing. I don't have to sit and watch the charts all day. Trading 5-minute charts, you got to sit and watch the charts all day. And besides, if 99% of traders lose money there, why do I want to be trading there? I'd rather be giving myself better odds, and swing trading gives me 40% odds of winning. So it's better odds than the odds that I've got on 5-minute charts. So those of you that are winning on 5-minute charts, that's wonderful. I'm really happy for you. Do be aware that over my 30 years of trading, I have seen a lot of tears of people trading 5-minute charts because eventually it catches up to you and it bites you. Anyway, let's go. What I do is I take it to the day chart. So this is now on the day chart. And I get my levels from the day chart because it's more reliable than the lower time frames. Now that you've got an idea of where it's going. So what we can see in the US 500 is it's clearly bullish. It's a bullish trend, but it could be breaking that trend. Now, the best way to get your levels, now we use the candles because I like the green candles and the red candles because the red ones show me when it's bearish and the green ones show me when it's bullish. I don't want to change the color of these candles to anything else because my brain immediately reacts when I see what's going on. A long red candle tells me that it's pretty bearish. A long green candle tells me that it's pretty bullish. So it helps me when it's coming out of my support levels. But what I'm looking for here is entry and exit points. So I'm going to put it on a line chart. And the reason I put it on a line chart, guys, is because a line chart gives me closing prices. And closing prices are far more important to me than highs and lows. Now, I want to draw trend line in here. It touches maybe 3 points. And that's a pretty good trend line right there on the US 500. What I see here on this trend line is it broke to the downside. It's come back, retested, and carry on breaking down to the downside. There's a very strong chance that the US 500 is becoming bearish. But I'll explain all that to you in just a moment. Then I want to draw my support and resistance lines in. Where's the closest support? A support area is an area where the price likes to get to. Think of it as a magnet, where it likes to get to, and then it goes away from it because there's money there to be taken. Think of the lines as other traders in the market. The squiggly lines. They're not just lines. There's guys that are trading in there. What they've done is they've traded to this point, and at this point, they've got orders in place. And the reason we can see that is because every time the price gets here, it bounces up. Every time the price gets here, it bounces up. Every time the price gets here, it bounces up. That tells you there's orders lying here. There's money lying in this area. This becomes a support level. Where's the resistance level? There it is. Every time the price gets up there, it drops off. It's not the greatest one, but it's there. And you've got this lovely trend support running through here, which has now broken. Okay, now you could draw a support line out this way, giving you a long way down to the main support. There's a main area, and that would be 55. That if you wanted to draw more lines, don't draw too many lines, but if you wanted to, and that's where I'm expecting the S&P 500 to land. It may not. It may go straight up from here. But what I'm looking at, guys, is a pattern that I've identified in the market. Now, if you want to know more about patterns, I do have a video on it, but you can also just download a Google Sheet which shows you all the patterns in the market. You get cup and handle, head and shoulders, triangles, all kinds of strange things. This is a head and shoulders that's developing here. There's the shoulder, there's the head, there's the shoulder. It's one of my favorite patterns in the market. But it hasn't played out because the price hasn't broken below the shoulder. It's actually trying to break up above the shoulder. If the price goes back up above the shoulder, then the head and shoulders is invalid. But it hasn't done that. It could still break through the support and carry on to the downside, which is what I expect to happen. Now look at this scenario here. Here's your trend support on the daily. It broke through it. It's come back up, retested it, but not only the trend support, which is now trend resistance, has it tested, it's also tested the main resistance at the top here. It's broken off of that big red candle to the downside. If you get a red candle out of resistance, you go short, and it's gone short back down to the main support level. Now there's money holding it up here. But there's still a head and shoulders lying here. And a head and shoulders will normally play out the length of the head, which would be around the 55 levels, which we saw now would be where the next support level is. Interesting, eh? How the confluence works. So now you've got a simple system that you can use to trade. With trend, what you do is every time it's in the trend and every time it hits the trend and it gives you a green candle up, you can stay long. Green candle up, you can stay long. The minute you get a red candle that breaks through it, then you go short, because then it's going to go short from here. Now it could go long if it breaks through here. Now look at this, another bit of confluence. If it breaks above the shoulder, then it also is breaking through the resistance, and it will break back through the resistance, proving that it's going long again. That means the head and shoulders is invalid. If it doesn't, if it breaks through this and goes through the support, then it's a short, it's going short. But we're not trading on the daily, we're trading on the 4 hour. So we're going to go back to the 4 hour chart and see what we have on the 4 hour chart, because the 4 hour chart is going to look slightly different to your daily chart. Now what you can do with your 4 hour chart is say, all right, we've already determined on the daily chart that this is bearish and we want to be short. We've already determined that this is the support and this is the resistance, and there's a trend resistance now, which was support that it broke through. So we're looking at a short trade. When are we going to take this short trade? Well, preferably when it breaks through this support, because then you've got a short trade down here. So you're waiting for a level of about 58, and you can take this short down, probably all the way to 55. How do we know if this is not a trade anymore? You can take the 4 hour, you can draw a trend in here and say, hey, do you know what? There's my trend at the top here. I can see where that is. It's over here, right on this resistance here. So effectively, I don't have to draw that in. So I now know that from that side and from this side, if this price gets up to this resistance level at 6,050, this trade's going long. It's probably going to break through all these areas and continue on to the upside, because then it's not only broken the shoulder, it's broken resistance, it's broken all the resistances, and it's going up. But if it goes down and breaks through this support and gives me a red candle out of here, this is going to be a fantastic short trade. And that's as simple as it gets, guys. Keep it simple, keep it easy. If you're not sure how to do this, I've got loads of other examples in my other videos that you can go and have a look at, and they'll show you how the system works on different kinds of charts and different kinds of patterns. This is just one simple kind of pattern that I'm looking at. This was a very bullish trade, and just remember, if you are trading the US 500 short, it is quite risky, because I expect over the period of this year that it will be a long trade. This is a very short-term short, if anything, a small correction that I'm looking at, and I could be wrong. It might go wrong, it might just go straight up and just go long again. But all of these sellers are coming back into the market, and most likely we're going to get a bit of a correction. But let's see how we go. Let's see how that plays out. So guys, now what you do, because of that scenario where no matter what I say to you here, it's a 50-50, you do have the high probability either way you trade, because you're waiting for confirmation, you still have the 50-50, and there's no guarantees. This is why you need the strategy. And the strategy is what I'm going to talk to you about right now, right after these charts. Go and listen to my strategy. That's what's going to make you the money in the markets, not this, not these squiggly lines. So that's the charts. Not too difficult on the system, is it? While you're here, don't forget I've got a free Forex book for you down there in the description. Go and grab it yourself, totally free. But let's talk about the strategy. Let's talk about how you can actually make money in the market now. And what's that all about? Well, it's still Coffee with Rob. Look, at the end of the day, guys, it's all about having a little business plan. So it's a two-step business plan. You don't have to write it down. It's pretty simple, really. You don't have to write it down. You just remember it. It's so easy. And it's this, okay? What you got to do is say you've got an account size, and we're going to say your account size is $100,000. Going to make it easy and a round figure. As I've told you guys before, and I've told everyone before, I don't care if your account's $5,000 or $50 million, it's going to be the same. I'm just using a $100,000 account as a baseline. If you create a $100,000 account, that doesn't mean if you make a profit and it goes up to $150,000 that it must be a $150,000 account. Trade it as a $100,000 account until you decide mentally that you're going to change it to a different size account. You might want to take that $50,000 profit out and put it in your bank account at the end of the year. I don't know. You've got a $100,000 account. The simplicity of the business strategy is this. You know you're going to lose 5 and win 5 on every 10 trades in all high probability. There is also the probability that you lose 10 in a row, and there's the probability that you win 10 in a row if you're lucky. But here's the basis of it, guys. Risk 1% on every single trade, no matter which trade it is. Doesn't matter which instrument you're trading, if it's your favorite, your non-favorite, or if you've never traded it in your life before, keep the same risk. And the basis behind this is if you risk $1,000 on every trade, you want to make around $2,000 profit on every trade. But that target has got to be realistic as well. So you can't just set a target and hope that it's going to get there. It's got to be a realistic target. Otherwise, your risk to reward is wrong and you're basically fooling yourself at the end of the day. But how do I take that $1,000 stop loss on every single trade? Because, you get different trades, you get different size trades, and, sometimes you just feel, well, if I only took $1,000 stop loss, my stop loss is going to be too close to my cost, or, and it's going to get taken out, and all these strange things that I hear about. So here's how easy it is, guys. The first thing you do when you look at the trade is you look and you say, if I was to take this trade, at what point would I feel this trade's invalid? In other words, if I looked at this trade and the price was there, I would feel very uncomfortable about holding this trade, feel extremely uncomfortable about taking this trade. But that's where I want my stop loss. That's your first decision. Now you put your stop loss there. Doesn't matter how far away it is from the cost. That's where you want your stop loss. Now you work out from that stop loss invalidation area back to the cost, how much $1,000 would be, how many contracts, how many points, or whatever it is you're buying. How much is that? It doesn't have to be exactly 1,000, 1,010, 1,100. It doesn't matter as long as it's close. You got to keep them close. Now you've got the size of your trade. Now all you got to do is work out, is it viable to take this trade? Will I be able to make close to $2,000 on this trade? Because I got $1,000 risk. I don't want to make a $50 profit. I want to make a $2,000 profit. So if I put that profit level in, do I think that I'll be able to reach that? Is it a possibility? Sometimes it's not, and sometimes it'll be, maybe I'll make 1,500. Do you know what? I'll take that trade because I'm making more on the win than I'm losing on the loss. But I will try and look for the ones that are 2 to 1. Now you've got your trade. Easy. But what do I do now? Now I take the trade, it goes into the loss, and it starts going against me, which it happens quite often because we're not infallible. We're all human beings. We're all normal. None of us are perfect. We don't always win every single trade. Name somebody who does. I'll name a genius. Anyway, now you've got your trade, starts going against you. Rule number 1 is do not dollar cost average. Don't try and average or hedge this trade. Don't try and buy more to try and get it back. Let it go. Leave it. It gets to your stop loss. Do not move the stop loss away just because you want to stay in the trade. Let it go. Let it take your stop loss. Boom, gone. Oops, you made a mistake. Remember when you took the trade, you already decided that is an invalidation area. So why would you want to stay in the trade? Think back to when you took the trade. So it's a rubbish trade now. So you want to let it go. Let it go. First rule. Second, if it goes into profit and you're $200 in profit and your fingers hovering on the sell button, sell, I got $200 profit. Take your hand, put it on the table, grab a brick, smash your hand with it so that you can't click the sell button. That's my only solution because you all do it. Don't tell me you don't. You're all doing it. Here's the thing, guys. Do not sell. Don't sell. Just leave it. In fact, try not to watch the charts. Come back later. Now you've got a trade in, goes into profit. Let's say it gets to $700 in profit now because you've sat on your hands and you've let it go. You've left your hands out of it and you've let the trade run. It's getting to $700. Now it's getting itchy because you really want to take that profit now. It's at $700, man. You want to take it. So take the stop loss, move it up to cost. Your trade is now free. And if you feel more comfortable, give it $100 profit or something. It's fine. Just put it up there. Now you're in profit. Your trade is free. There's no $1,000 stop loss anymore. And it's moving up. And if it moves up further, you just move the stop loss up behind it. Keep it maybe $500 behind it and keep it going up until it reaches your target. Then you take it right up and you put it like $100 behind your target. If it comes back and takes it out, let's be honest, you kind of made target. And if it keeps on going up, bonus. You're making more money. You will have a whole mishmash of small profits because the stop loss will come back and it will take out that trailing stop that you've put behind it a couple of times. So you'll have a few that make $100, a few that make $500, and so on. But it's not going to be much different to the way you're trading now anyway. So, same thing. Also, you'll have a mishmash of small losses where, you got out of the trade because if you're going into a loss and you just feel like that trade's not working, take as smaller losses as possible and just get out. I don't say you have to wait until it takes the $1,000 stop loss out. You can get out as soon as you need to. You see, the point of this is, guys will tell you about a win rate. And I don't believe in a win rate. Everyone who knows me will tell you I don't believe in a win rate. Because a win rate is BS at the end of the day. Because if I have a win rate of 9 out of 10, what does that mean to you? That means I win 9 trades and I lose 1. Here's the problem, guys. I could win the 9 trades scalping because the system can help me to win those trades because the system is good. But I'll win 9 trades at $10 each, and the 10th trade will lose, and I'll start averaging down, I'll start adding, and I'll start holding on, and I'll lose $1,000 on the 10th trade. Now, what do you think that is? Do you think that's a profit, or do you think that's a loss? Come on, let's be logical, guys. So what is the win rate done for your trading? How's the win rate made you a winning trader? It hasn't. In fact, it's made you a losing trader, man. Win rates are rubbish. Forget about win rates. Win rates are for the system, and the systems are all the same. There isn't a system out there that doesn't work. They all work. They've all been backtested, and someone's designed it, and it's a fantastic thing. Some of the indicators are lagging indicators. You'll see I've done a series on a few of the other indicators that we don't use, because we don't use indicators on our chart. And you can go and look at those. That's great. All the systems work. But what no one tells you is that there's a strategy that you need. You need a business plan, you need risk management, and you need to approach your trading in a specific way. That's how you make the money. It's about business. It's not about the lines. The lines are just the means to an end, let's say. They give you a high probability trade. What's a high probability trade? In all probability, something will work out because it happened in the past. That's what a chart does. You look at a chart and say, well, that's what happened last week. Perhaps it'll happen this week as well. When you take a trade, any trade, whether it be on 5 minutes, 4 hours, 4 days, 4 years, your mindset is you want to make a profit in the future. So you take that trade based on the knowledge that you probably are going to make a profit sometime in the future. And you've got a plan for that. That's how trading works. So that's how it works. And that's as simple as it gets. If you want to know more about the systems that we use to get there and more about the strategy that I talk about, go and have a look at these last videos and go and see for yourself how they work. Guys, come back for the live show tomorrow. Don't forget, we're live again on Tuesday. Yay! And we're live again on Thursday. And you can ask all your questions there and we can chat and talk about swing trade and position trading and whatever you need to know. Thanks for watching, guys. Till the next one. Cheers. Ciao and bye.